The performance of the FTSE 100 has been hugely disappointing in recent months. It has declined by as much as 11% from the record high it achieved in May. Investors have become increasingly concerned about the prospect for a global economic slowdown. There's a risk of a full-scale trade war between the US and China, while a fast-growing US economy may lead to an increasingly hawkish Federal Reserve. Those fears may persist in the short run, and could cause further volatility. In the long run, though, the FTSE 100 appears to have the potential to surge higher. Here are three. The performance of the FTSE 100 has been hugely disappointing in recent months. It has declined by as much as 11% from the record high it achieved in May. Investors have become increasingly concerned about the prospect for a global economic slowdown. There's a risk of a full-scale trade war between the US and China, while a fast-growing US economy may lead to an increasingly hawkish Federal Reserve. Those fears may persist in the short run, and could cause further volatility. In the long run, though, the FTSE 100 appears to have the potential to surge higher. Here are three reasons why. Valuation: at a price level of around 7,000 points, the FTSE 100 doesn't appear to be overvalued. It has traded within a couple of hundred points of its current level as long ago as 1999. Given that the world economy has grown significantly in the intervening 2 decades, it could be argued that the FTSE 100 is cheap. Dividend yield of over 4% is relatively high for the FTSE 100. It suggests that a number of its constituents are still not highly rated by investors, despite the index having enjoyed a decade-long bull market. This could mean that there remains a margin of safety on offer, which may allow for capital gains to be generated over the coming years. Brexit: while there are various rumors about the UK and the EU being close to a deal on Brexit, the fact is that there remains a significant chance of a no-deal scenario. This could create a significant amount of uncertainty among UK consumers, businesses and investors, which may lead to a weaker pound. Since 3/4 of the FTSE 100's income is derived from international markets, this may provide a boost to those companies which report in sterling, but mostly operate abroad. Even if a deal is signed between the UK and the EU, there's likely to be a period of significant uncertainty, which may cause the pound to weaken. In such a scenario, the prospects for the FTSE 100 could improve. Global growth: while there are concerns about a global trade war and rising U.S. interest rates, the world economy appears to be in relatively strong shape. Certainly, growth rates in the U.S., China, and other major economies are in a period of change, and volatility could be the end result. But with favorable monetary and fiscal policies being implemented, the outlook for the developed and developing world could be more positive than many investors are expecting. Therefore, now could be the right time to consider high-quality FTSE 100 shares that are trading on lower valuations following recent price falls. While they could experience paper losses in the short run, due to continued weak investor sentiment, in the coming years they have the potential to generate high returns. You really could make $1 million, of course, picking the right shares and the strategy to be successful in the stock market isn't easy. But you can get ahead of the herd by reading the Motley Fool's free guide, 10 Steps to Making $1 Million in the Market. The Motley Fool's experts show how a 7-figure sum stock portfolio is within the reach of many ordinary investors in this straightforward step-by-step guide. Simply click here for your free copy. Peter Stevens has no position in any of the shares mentioned. The Motley Fool UK has no position in any of the shares mentioned. Views expressed on the companies mentioned in this article are those of the writer and therefore may differ from the official recommendations we make in our subscription services such as Share Advisor, Hidden Winners and Pro. Here at the Motley Fool we believe that considering a diverse range of insights makes us better investors.